Hi and welcome once again to Kotak Securities Weekly Fundamental Podcast. I am Rini Mehta. Guys, bears seem to have tightened their grip in the month of May, while gold has been recovering from a corrective phase. The Indian equity market, that is Nifty index, gained 0.3% as investors hope that global inflation will weaken over the coming months and improve the chances of a soft landing. Meanwhile, our Indian government unveiled a number of measures to control inflation, such as one is reduction in excise duties for auto fuels, second is increasing export duty for steel, and third is allowing duty-free imports for 2 million tons of edible oil. Sectorally, if we see, banks and automobiles outperformed, while metals, IT services and oil and gas underperformed. Basically, equity markets focused on evolving growth inflation dynamics, ongoing fourth quarter earnings prints, and volatile global commodity prices. Markets continued to price in the probability of aggressive rate hikes by the US Fed. Last week, if you see, Sensex was at 54,753 with gain of 0.8% during the week, while the Nifty was at 16,319 reporting gain of 0.3%. Mid-cap and small-cap index underperformed. On the economy front, RBI Governor Shaktikanta said that the Monetary Policy Committee will increase interest rates to contain inflation, but the objective is to ensure that the market doesn't get any shocks and that growth revival is not derailed. Further, last week, Thursday, marked the end of the World Economic Forum, where business leaders, financiers and politicians offered some ominous predictions for the European economy. Russia's defense ministry claimed overnight that it will allow foreign ships to leave ports on the Black Sea and Sea of Azov. Meanwhile, China held a rare nationwide meeting via teleconference Wednesday to bolster an economy battered by COVID. Coming to the FPI flows, notably FII flows continues to remain negative in the month of May till date and have sold around rupees 51,848 crores till date. Given the headwinds I mentioned earlier, FII flows in India are expected to remain volatile in the near term. Other than Thailand, all other emerging markets witnessed outflows in the month of May till date. Moving on to the top picks and fourth quarter updates. You can consider buying Apollo Hospitals with target of rupees 4,710. It's a window of opportunity, guys. Apollo Hospitals' fourth quarter EBITDA was 6% lower than our estimates, largely on slower hospital traction, while another delay in health company fund raise is a dampener. Execution stays impressive and Apollo Hospitals is witnessing healthy demand tailwinds across all segments. Post a 38% fall from its 52-week high, valuations are looking attractive. So we upgrade to the stock to buy with fair value of rupees 4,710. Lastly, our pick of the week is L&T. L&T's fourth quarter result prints was negatively impacted by externalities on all the key fronts, with margins being hit the most. In such a context, L&T has done very well on order inflows. While inflationary environment would limit recovery in margin, we envisage L&Ts to sustain healthy double-digit growth trajectory and cash flow generation. Investment in new age technologies over the next 5 years would be similar to the investment in hard concession assets, which L&T aims to exit over such a period. So we cut some of the parts by 8% approximately to rupees 2,025 and retained buy on the stock. Okay guys, that's all for today. Thank you for tuning in. Signing off.